Hello and welcome back to Smart Real Estate. We are lucky enough to have Jesse Lipscomb joining our show. He is a registered tax preparer as well as a financial planner with IRA Solutions, Inc. Hey Jesse, how are you?
What's going on, Angie?
Thanks for coming on the show today. Now tell me, how did you get into the tax business?
Okay, so I've been doing financial planning for about the past 10 years, since 2001. Okay, and specifically as an investment advisor, you know, our job is to take a look at your situation, see how we can improve it. But I see that more and more of my clients were needing tax planning help, right? Because they'd go and they'd talk to their tax preparer, and he would say, well, I don't know, I can't give you investment advice. So I decided to become a registered tax preparer, and our niche now is we do tax planning, meaning we look at your tax return, we find ways, opportunities for you to save money in your taxes and keep more of what you earn.
Wow, so you don't wait until it's kind of past the point, you try to look in advance to foresee maybe ways you can help them.
Absolutely, and in fact our business, RE Tax Services, is specifically designed to do just that. We have a, starts off at $99 a month. We do all of the bookkeeping for our realtor clients. That includes their tax return at the end of the year, but best and most importantly is we give them monthly tax planning advice as we're looking together at their profit and loss statements and earnings. I mean, if you are a real estate agent, if you don't know exactly how much money you've made year to date and exactly how much money you've spent, there's no way for you to do any effective planning.
I agree. So tell me, what's the deal with your company? What makes you different?
Well, I think it's that dynamic of the monthly subscription where we're in the 21st century. The bookkeeping aspect of it is phenomenal. We can utilize direct bank feeds to get all of your deposits, all of your expenses from both banks and credit card statements. And we're using that so that without having to come to your office, without having to meet and gather your receipts, we're able to give you a snapshot of where your business is. And when you do that every month, and it's compounded with tax planning advice throughout the year, now you're being proactive, you're planning, versus being reactive when you have your taxes prepped in March and you go, oh no, you know, I owe this big tax bill. How am I going to minimize it?
Mm-hmm. So you're essentially their accountant for $100 a month.
It's pretty awesome.
I mean, that's amazing. That's really interesting. Now tell me, how are taxes for real estate professionals different than other professions?
Well, I think the key is the fact that we're licensed professionals. If you are a real estate agent, okay, you're self-employed essentially. So I think the key word is a real estate salesperson, right? So you're not a broker, you're just a regular salesperson. A lot of CPAs, tax professionals, are going to tell you, Angie, you need to incorporate, because that way you can lower your self-employment taxes, which really, it's almost 15% net, right? It's 15.3%, but breaks down to a little under 15% of your earnings you have to pay into Social Security and Medicare, right? Well, the problem with the strategy of shifting your income from your self-employed earnings to a corporation is if the corporation isn't licensed, the IRS will look at that, if they audit you, as shifting of income. It's the fruit of the tree, right? Did you, the agent, earn it, or did your corporation earn it, right? Did you shift it just to avoid self-employment tax or not? Okay, if you were an unlicensed business, right, and you were able to set up a corporation, great, you can use that to lower your self-employment tax. But as real estate professionals, you have a license. So you need to make a conscious decision. Are you going to be a licensed individual agent, or are you going to get a broker's license as a corporation and now have the earnings flow through that corporation? And that's your planning opportunity to save on self-employment taxes. But unique to realtors and insurance agents and other licensed professionals, you need to become a broker and have that corporation license to take advantage of that.
Interesting. And then how does it work with realtors? Because I know they don't have taxes coming out throughout the year, and then at the end of the year they look at how much money they owe or don't owe or whatever their situation is. I mean, how can you prevent that?
Well, I think it goes back to the first bit we were talking about, Angie, of having good records, right? Because it's so easy to earn money and so easy to spend money, and when it's up and down in real estate, it's very difficult to plan. And the worst thing to do is to earn $100,000, which that's not a horrible thing, right? But you earn the $100,000 and you don't pay any quarterly taxes, you don't do anything, and then you go and see your tax person. Oh, by the way, you owe $20,000 in taxes, $15,000 of which are self-employment taxes. Well, $20,000, where is that money going to come from? Okay, so much better throughout the year to know where you are, to do some planning therein, and maybe you need to make quarterly contributions. Maybe you need to become a broker and become a corporation and see if there's a way to save $10,000 in self-employment taxes.
So it's really unique to the situation, and that's why they need to consult someone like yourself.
I think real estate professionals they absolutely must keep good records. And if they do that, then their whole tax picture changes. If you're able to know where your income is coming in, where it's going out, how to track it, how to save, how to lower your taxes, you have opportunities because you're planning and not reacting. Okay,
real quick, we're getting ready to finish up here, but what are the 3 best tips you could give someone, getting ready to prepare their taxes?
Anyone at all? Mm-hmm. Well, the first thing is, again, accurate records, okay? I think the best thing to do is to do a review of your tax return. In December or November, look at the prior year. Why? Because there's little things, especially with the advent of the new Affordable Care Act or Obamacare, whatever you want to call it, right? If you're at a break point of income, you may jeopardize getting that tax credit on your taxes. Well, if you're right on the bubble and you make a $5,000 bonus in December, it'd be pretty good to know, hey, I can put that in a 401k or an IRA or health savings account, so I keep my income under the threshold, so I keep the credit and don't end up having to pay it all back.
Gotcha. Prepare like anything else in life. Well, thanks so much, Jesse, for coming on. It was really valuable information. Next up, we have Bob Weller, who is a lender with Guaranteed Rate.
Hi, my name is Jasmine Corona with Farmers Insurance, and you're watching.
And you're watching.
And you're watching.
And you're watching.
And you're watching Smart Real Estate.
Smart Real Estate.
Smart Real Estate.
Smart Real Estate.
Everything you ever wanted to know about real estate, but didn't know who to ask? Find your answers at Smart Real Estate.